Yo, day 21. This is how to take profits. I want to show you guys basically how to take profits, when to take profits, and how many contracts you should be using, when to risk less, when to risk more. Basically, just a little bit on how to take profits, how to maximize your profits, how to basically maximize or minimize your losses. So, this has a little bit to do with risk management. This isn't going to be like a crazy long video. Like I said, I have so many of these videos for you guys. It's going to be like fucking 50 days long. This is day 21. So let's get into it. I want to show you guys and I want to tell you guys why we are taking profits at highs and taking profits at lows. So going back to our very first video, do you remember when I said, hey, like, liquidity is above highs and below lows? You should know that by now, right? We're not fucking slow. We're not retarded at this point, right? Good job. At lows, at highs, bro. Because at lows, this is where price has pushed price down. There's liquidity above here, sweeps it, boom, downtrend. So, if we're in an upside move, like if we're in fucking calls, we're in longs, where do you think price can reverse? Now, this is for everybody, for beginners, for intermediate people, because I was looking at longs right here. So, you guys know the strategy. Plus, this is going to be a little bit of a trade recap and how I would have taken this trade. I was looking at SPY longs. I hesitated. It happened real quick. I didn't want to chase it, so I didn't make any money. It happens. It is what it is. And my bias was right. I called this bitch out. Fuck it. It is what it is. I don't chase girls. I don't chase trades, and that's exactly why I'm about to, you know what I mean, keep one girlfriend and keep one plan, one setup, one fucking trade for the rest of my life, because I don't chase shit, right? There's always going to be another day, bro. Always going to be another day. So, stop trying to chase trades, because sometimes your bias might even be wrong. You might miss the setup, and then it might reverse right away, and you could have been like, oh shit, good thing I actually missed it, or good thing I didn't fucking try to chase a trade. Because, like, what can happen is I tried to chase it, or if I tried to chase it up here, it could have came up, I could have entered, and then it could have just tanked down, and I could have missed out on profits just to lose. So, we're going to do a trade recap. I want to show you guys exactly what I was looking at before we even talk about how to take a win or how to take profits. So, earlier today, as you guys can see right here, this is what price looked like as soon as market was about to open. What would you be thinking right now? Knowing our strategy, knowing our plan, knowing what we have to look at every day, what would you think right here? Are we going to the downside or upside? Let me know. All right, that's kind of pretty easy to say right off the start. If we look at the 4 hour, we look at the 1 hour, what's happening, bro? What is happening? All of these lows getting swept out. Lows getting swept out. Order block getting tapped, right? So we got the order block, which is this whole entire candle, basically. Or I'm pretty sure we had a 15-minute. Yup. 15-minute order block down here. So we have this order block down here getting tapped into. That's a level of orders that got filled to push price up. Comes down, taps it. You're going to want to see an upside movement. Also, bro, what do we have? Lows, lows. All of these lows. What happens on the 1 hour? Sweep. Swept out all these fucking lows. We're going immediately to the 1 minute time frame, looking around the 9:45 to 10 a.m. reversal. We have a bearish fair value gap right here. We're seeing this to get inversed. Also this one up here. Wham! Big ass upside candle. Are we entering right here? No, you know I wait for pullbacks. Also, you know I wait for like the EMAs to cross. If we look at the EMAs, they were crossing literally right as that happened. So, look, if you look right here in replay mode, you could see as soon as the inversion happened, as soon as we closed above these fair value gaps, telling us that we want to go higher after a liquidity sweep, that's telling us, yo, we want to go higher, but let me wait for a pullback. You see the EMAs, they were crossing right there, and then you see us make a fair value gap right here. Boom. I wanted to enter right here as soon as that candle came down. I missed the setup. Bro, this green candle fucking shot up so quick, I didn't want to chase it. So I said, okay, let me wait for another pullback. We never got like a big pullback, except this one. I didn't end up taking it, and it ended up going higher. And I missed the whole setup. Doesn't matter. I don't care that I missed this. I looked for this. This was a great fucking setup. I never got a 5-minute pullback either. Look, see? The 5-minute fair value gap right here never got tapped into. Never. Almost. So close, but never actually hit it. So I didn't want to enter. I stuck to my plan, and I'm super fucking happy I stuck to my plan. So, With this strategy, you know that's a strategy we use every single day. If you have been watching the course, you know that I trade in my Discord all the time. I do these trades live sometimes. I don't trade every single day, but I trade frequently, live for you guys, and I take these setups. So, make sure you're learning, make sure you're studying this. I'm showing you guys exactly what to do. Today, it's not too much of a strategy video. It's more of a how to take profits and where to take profits. So, I want to give an example where I would have taken profits right here. So, like I said, points of interest of liquidity are inside of fair value gaps at highs and at lows. So, we are always putting our take profit lines, however many contracts we have. Let's say if we have 5 contracts, I'm putting 5 take profit lines. If you have 2 contracts, you're putting 2 take profit lines, and you're done, like a 1 and 2. 3 take profit lines, 1 to 3, yada yada. Does that make sense? So, this is what I would have looked for. Let's just give an example. So some of you guys might take 1 to 2 contracts. I don't recommend taking 1 contract for any of you guys choosing options. If you're trading futures, remember, you can still trade my strategy, but I'm more of an options guy. I teach options. If you're trading options and you're trading with 1 single contract, I don't recommend that. I feel like it brings on a lot of emotions. You can't maximize your profits. I think taking partials and being able to trim is very efficient. I think 2 contracts and up, done deal. So, not 2 contracts, not 5. Let's say we have 3 contracts. Let's say we're looking for a 1 to 3. Basically, we're risking 1 fucking quarter to make 3 quarters, right? You don't want to risk 1 quarter to make 1 quarter. That's like a fucking gamble. That's like, what's the point of that? That's literally a gamble. So, but if someone says, yo, if you risk this 1 quarter, you can make 3 back. That sounds like, you know what I mean? That sounds pretty good. So, you know the setup I just said. Remember, boom. We inverse this. We're waiting for the pullback. You know right here was our entry right at this. Boom. This is a good pullback. Good risk to reward. Pretty good. We're entering right here. I would have put my stop loss like right down here for a 1 to 3. Most likely, look, 1 high, 2 highs, like 3 highs. That's like a 1 to 4. But it doesn't matter. You could still have fucking 3 contracts. Okay, let's even say we wanted to do a 1 to 3, bro. Fuck it. 1, 2, 3, right there. Wham. Which would have been basically, let's put our stop loss up a little bit. If you want to make it fucking perfect, which it doesn't need to be perfect, bro. If you do all this shit, you're a fiend. There's no reason for it to be absolutely perfect. In my opinion, I don't need to. Basically, 1 to 3. You see it. Risk to reward ratio, 1 to 3. So what does that mean? You're risking 1 of these boxes to make 3 boxes. Does that make sense? You're risking 1. I'm not doing it perfect, but you understand it. You're risking 1 to make 3. The risk to reward is 100% there. So, if we're looking at it right here, you understand, hey, if we're entering... Hold on, this just disappeared. There we go. If you're entering up here, stop loss like at these lows down here. Usually I'd like to put like what, a red... I'd put it at this low right there. Look, 1 to 3.2. Bro, it's a great setup. We're fucking... This could potentially be good. Now, where would I take my first contract off? Everyone's always asking me, like, yo, where should I trim? So if I go to here, bam, you know we're entering right here. Right there. We would have entered down here. First contract would have been at this high 1,000%. This is where I'm putting the green line. Let me fucking... Actually, no. Never mind. First high right there. That's most likely what? From 559.22 all the way to fucking 62. That's a 40-cent move. You're easily up over 20% right there. Easily up over 15%, 0 DTEs. Or even on futures, whatever you like to do, whatever you like to call it, you're up a certain amount. On options, it's a percentage. We're easily up 15 to 20% right there. I'm easily, bam, trimming 1 contract right there. Maybe 2. Maybe if it looks like, yo, we're sweeping highs out, if we show bearish momentum, I might just trim 2 contracts and then hold 1 runner. Does that make sense? So if we're up like 10 to 15 to 20%, up here can look real good to take some profits off. Does that make sense? Like, when you see green, you got to take green. Realize 20% is a great trade, bro. That's a great-ass trade. Imagine you put 10K into this. You would have made 2 bands already. 2 bands. Just from seeing this upside move. 2 fucking bands, bro. So, realize that. And realize that 20% is good. What I would say... And this is the biggest advice that I could give you as a beginner or intermediate trader. Do not look at profits. Do not look at your phone or look at your screen. Look at the profit going up and down. You do not want to see that. You don't want to stare and look at the profits going up and down. That is not good for your mental. It'll make your emotions fucking spike up and down. It'll make you act on hesitation. It'll make you act on emotion. Basically, it'll make you like, oh, should I trim, bro? Like, I don't know. This looks good. You're fucking tweaking off a fucking perky. Like, what are you doing? Chill out. Put your phone, look, press buy at the entry. Put your phone down. Say, bang, see ya. That simple. Until that shit hits right there, you are not touching your phone. Or until it hits your first take profit, you're not touching. Bro, you're watching. You acted on your edge. Now you just fucking sit here. If you're tweaking out the whole time, saying like, oh, fuck, bro, like, oh my god, am I down? Like, if it comes like right here, you're like, oh my god, I don't know, like, am I down a lot? Bro, if you're tweaking about that, what did you do? You fucked up already and you didn't stick to your plan. You probably put way too much money in there. You probably oversized, fucking full ported. You're not sticking to your plan. You're basically gambling. Maybe this isn't even your strategy. You're just hoping it goes up, right? So make sure before you even get into the trade, before you even trade, before you even act on your edge, before you even press that buy button, or even think about pressing buy, make sure your confirmations / confluences are aligning and look good. Does that make sense, brother? So, damn, bro, I just had some ground beef. Guys, am I getting huskier or no? I'm trying to I'm about to start creatine. Ooh, look at the shoulders. Hey! Ooh, I'm getting husky, boy. Hold up. Abs coming in. I'm about to take steroids. And don't they have to pinch that shit in their butthole or no? That was like a random topic, but damn, that's ass, bro. Motherfuckers that take steroids are fucking fruity. They put shit on their asshole. I don't know why I'm saying this while I'm making a course video, but I don't give a fuck, boy. Because we finna cash 2025, boy. Johnny Cash, Johnny Banks, Johnny Sins, JonnyOptions, bro. Stop playing with them. But let's get back to the fucking game. So, first take profit at this high. Simple. Why? Because there's liquidity. What happens? This could easily have got swept, and then you could have saw a downside move. And what are you doing? You're stopping out at break even. Simple. You can re-enter if you want to. Stop out of break even. Stop out on that last contract until it hits your stop or until it hits your break even, whatever your plan is. But me, first off, I'm entering right here. Right here would be a what? Like a 1-to-1. Fucking perfect. Look at that shit. 0.98. Basically a 1-to-1. That's where I'm taking my first take profit. Simple. Look, 1-to-3. See how it says risk / reward ratio 1-to-3. It's like you're risking 1 to make 3. Right? So like a 1-to-7, that's fucking good. A 1-to-1, that's mid. That's like a gamble in my opinion. That's like, if you can get that, that's good. If you can make that frequently and consistently, that's good. But it's like a 1-to-1, you're not maximizing your profits. Unless you are scaling in with a big amount. That's different. But if you're trading with normal size, or like decent size, a 1-to-2, 1-to-3, fucking perfect. Like a setup like this, 1-to-2. Bam. Like something like that. Perfect, bro. If you can hit that every single, like, a decent amount, bro, you're going to be profitable easily. I like to go for a 1-to-3-ish, around there. 1-to-2, 1-to-3. So, even 1-to-4, bro. I hit 1-to-5, 6, 7s, bro. My shit's be cashing. But first take profit is always at highs because there's liquidity. Because it can reverse. Remember that. At highs, if we take it out, it'll reverse. So I'm making sure as soon as we take out this level right here, this key level of rejection at 559.62, you see it, we're taking profits. We're immediately saying, yo, I'm taking profits right there. Now, looking at this, where would my second take profit be? Most likely around a 1-to-2. So around this area at this little like green little order blockish type of shit. This little like accumulation area right here. So, most likely, just knowing me and myself, I'm putting it right here. Yo, what type of random spot is that? Why are you taking profits right there? For one, it's not a random spot. It's the top of the fair value gap. If anything, I probably would put it right here. Right there. I'd secure more right there. Not gonna lie. It's a little close to TP1. It's a high, though, and it's the start of a what? It's for one, it's the middle of the 15-minute fair value gap. You see that? So right here, it's the middle of this fair value gap. Also, it's the beginning of a 5-minute fair value gap. So we could have easily came up into here and rejected. So I'm making sure I'm securing green, either right here or right here. At the top of the fair value gap, when it fills it, or at the bottom. Either of this in between here, I'm making sure I'm taking profits. And then most likely either, let's say we had 3 take profits. My last take profit right there. Bam. That's like a 1 to 2, 1 to 3. I probably actually would have taken it up here. I'm pretty sure it actually hit this high too. Look, if we check. Bam. Easy. So, would have been taking profits around this high and then this high. Let's just say we were targeting a 1, 2, 4. 1 to 4. Bam. I'm done. Or we could have targeted this high and all of this shit got hit, bro. Higher time frame highs, which was up here, right? We took out these higher time frame lows, drawing liquidity, higher time frame highs. Swept that, and then we went, look, to the downside. So, that's simple. Sweep highs, downside, sweep lows, upside. I would have been taking profits at highs. Let's go to one to the downside now. Let's give an example. Let's say on the 1 minute over here. I'm going to go in replay mode. Let's say, look, we have a bunch of highs over here. Oh, we're sweeping highs. Let's see what happens. Boom, we broke structure. Let's wait for a retest. Right there, retest right here. We're taking puts. Stop loss up here. I see all of these lows. I would target this low right here. Bam, what is that? That's a 1 to 2 almost. Is this running? We'll see. Before, let me show you guys. So you know that we entered right here. Right at this fair value gap. So I'm just giving an example. I don't know if this trade's actually going to play out. Okay, we're accumulating sweeping liquidity. Boom, we broke structure, broke these lows out. Now we're retesting this area, which is a fair value gap. We're entering right here. Stop loss either above these highs, whatever you're willing to risk. If you only have to risk this, do it. It's up to you. I'm willing to risk all of this above these highs just to make sure, because what? There's a order block right here. I'm pretty sure there's what? Some 3-minute fair value gap, something. Like there's something that it might want to retrace to more. So, putting my stop loss above there, targeting all of these. And even if I put my stop loss at these highs, which is actually, not going to lie, this is a big stop loss. I probably would have put it like in between here. Let's just put it right here. 1 to 3, bro. Literally 1 to 3. Entering right here, targeting. Where would my first take profit be? Most likely, this low right here would be my first take profit if I'm entering at the fair value gap. Then it would be these lows down here, because some more lows, and then bam, these lows down here. And that's 3 already. And then these lows. These are the last lows right there, remember, at the 1 to 3, bam. And this is what I'd be targeting. Let's see if it hits. Remember, we're taking, like, let's say if we have 2 to 3 contracts, 1 profit right here. Taking that, we're probably up like 15%. I'm making sure that I am scaling my position off. I'm making sure that I'm taking that shit off. You need to secure green, bro. Green is green. Fuck the money. Stop looking at the money. Stop worrying about the money. Focus on the percentage. Focus on the setup, on the 1 to 1, 1 to 2, 1 to 3, whatever you're trying to target, whatever draw on liquidity you think price is going to move to. Remember, let's just give an example. Well, let's see if it plays out. Bam. Hits 2 take profits. 2 take profits. 1, basically 2. Fuck it. I probably would have taken that shit right there. Not gonna lie. Looking at it like that, that shit hit my take profit. So I'm looking at that. Where will I stop out at? It's kind of accumulating at the break-even stage. I probably would have stopped out if we came up here. Not all the way up here. My last contract would have stopped out a little under break-even. Let's see what happens. And schmackies. Schmackies, bruh. Oh my god. And it probably goes lower. Oh, we... Mink. Look at that. We hit a... Bam! 1 to 8 risk to reward. Boom. Where would I have been taking profits at? At lows. So, like, let's give an example. Let's go on the 5-minute. Another take profit. Right, like, at this order block, probably right here. Bam! At this low, right there. Because we might just tap this and then go up. Another take profit. Definitely this low. Another take profit. These lows 100%. We hit those. Watch, I bet you we made an upside move. Did we? Ooh, we went. Yep. Look, see? Upside move right after we take out the lows. And see, that's exactly why you're trimming your contracts right there, because you don't want that bitch to go all the way back up. So, does that make sense, bro? It's super simple. You're realizing, hey, oh, sweep of liquidity, break of structure, inverse, boom, fair value gap, entry. all your stop losses above highs. Your take profits are at lows, at fair value gaps, order blocks, at highs, lows. Basically, points of interest of liquidity. Does that make sense? So let's say you have 3 take profits. You can... Damn, bro. My stomach is bussing. I've been eating too much meat. All types of meat. Every meat. Not the meat you're talking about, bro. I'm talking about fucking ground beef, you weirdo. Psych, boy. I've been eating all kinds of meat. Just fucking... Literally sucking meat every day. Eating meat. Smacking my meat on Spy. On QQQ. On Apple. Literally smacking it on the screen. Thanks for the money. Thanks for the money. Minkies. So. I think I'm retarded. I'm not gonna lie. Okay. Stop loss up here. Bam. We're taking profits at this low. Schmack. This low. Minkies. Boom. Let's say we enter 2 contracts right here. You know these lows could easily be swept. What are we targeting? Bam. 1 to 2 then. 1 to 3. That's good. 2 take profits. Bam. First take profit gets hit. Trimming 1 contracts. Okay. We're around near break even. A little in profits. Boom. This shit gets ran through like your girlfriend. We're done. We're done. You would have exited around this area right here. Second take profit, you're done. You would have missed out on all this unless you had a trailing stop. Now, I want to teach you guys how to have a trailing stop. Let's say you had 2 contracts in here. You have 1 contract right here, or 2 contracts. You trim your first contract right there. First con. Second contract right here, you're waiting. You're either going to fill it right here and take your full position off and be okay with that win, or what you're going to do is say, okay, I'm either going to trim it right here, or I think we can go lower, so I'm going to put my trailing stop loss to right here. You'll mark this out, and you'll put trail. Shit looks retarded. So, what does that mean? I'm going to delete this. If price comes back up to your trailing stop loss right where you took your first take profit, you're exiting. So, basically, it was only a 1-to-1. You're only making this amount. But it never hit your trailing stop loss in this, so your shit would have went all the way down here. Then you probably would have taken your profits like down here. You would have put like, okay, this is like a serious, like I'm done, take profit. Does that make sense? So you can always put like a trailing stop. I like to do that with 3 contracts because I enter with about 5 to 6. Sometimes when the setup isn't too good, I'll enter with 3, not putting that much risk on. So I'll exit 1 contract right here, the second contract right there, and then I'll be like, okay, this either can continue to go down, or if it comes back up to like my first take profit, I'll exit out and just take my 2 take profits. Does that make sense? It's basically just like having a trailing stop. So let's say, oh, I'm in profits. Down here, you're in profits. You're going to continue. Oh, I'm in profits. Continue to bring down the trailing stop. So whenever it ends up coming up, boom, you're exiting. Right at your trailing stop. Does that make sense? Your trailing stop is always following your profits. So you're being able to maximize your profits, but as soon as it comes up and hits that, boom, you're out. It's like trailing it. It's following it. Imagine something moving up, and I'm just waiting for it. Boom, it slows down. Bam, I'm catching it. Does that make sense? It's a trailing stop loss. You're letting your profits run, but as soon as it comes back to that level where you don't want to lose any more profits, you're taking it out and you're being okay with your win. Remember, green is green. Make sure you're accepting green and you're saying, hey, I don't give a fuck about the money. I'm in this because I want to learn the setup. I want to learn the strategy. I don't care about making a shit ton of bread right away. That's not my main priority. Your main priority should be realizing the strategy, understanding how to make money, or not to make money, how to catch the strategy, how to win with the strategy, because that's the point of this, right? We want to make winning plays with the strategy. But if you lose, that's not a problem. No problem. It's not a bad thing. Just make sure you're understanding, I need to get good at this strategy. I need to practice it. I need to understand liquidity, what lows and highs want to get swept. I need to understand market structure when we're in an uptrend, when we're in a downtrend, like this right here. Today, I took actually a loss on today because I failed to realize market structure. If we look at this, what was market structure in today? Right here. After that big move to the upside that we just wanted to catch. We're in an uptrend now, bro. Why? Because look how the hourly candle closes. Bam. Hourly candle breaks structure to the upside, breaking this resistance right there. We broke structure. We pulled back to a 15-minute fair value gap. You could have entered right here. Like right down here. Bam. Stop loss at this low. Targeting these highs. Look at that. That's a 1 to 3 almost. Let's see if it would have played out. would have played out towards the end of the day. But it was choppy. I wouldn't have traded during lunch hour. So 12, 1, 45, I would have entered right here around this area. Targeting these highs, bam, would have hit. Stop loss would have been probably like around down here. Smack. Easy trade, bro. 1 to 5 risk to reward. Targets at these highs. Like, we would have cashed out on that trade. And I took a fucking short right here because I was thinking, I don't know what I was thinking. I wasn't being aware, bro. I took a short right here. I thought we were sweeping out these highs. As soon as I enter, bro, we just fucking tanked up. Because I didn't realize the 15-minute broke structure. What we were doing was we were pulling back from this high to these lows. We pulled back right into equilibrium and went higher. I didn't realize market structure, so it's a mistake. Everyone makes fucking mistakes. I wasn't being aware. I was trading live with the Discord. I was reading a lot of comments, and that's not an excuse. I wasn't aware. I'm taking my loss. I learned today. Boom. Gonna be doing better tomorrow. That's all that matters. So, yeah. Make sure you're learning liquidity, market structure, how to take profits. Make sure you realize to not be super emotional when you're taking a loss because it's okay. Once you're okay with taking a loss, your trading journey gets so much better because you're just willing to learn and do better. And you make sure you see what you did wrong with that loss and you try to never fucking do it again, ever do it again. So, yeah, that's today's video, bro. A little late night upload, though, day 21 on how to take a win and how to take profits. Deuces, love y'all, boys.